Today we're going to go over our dynamic take profit system. So what is our dynamic take profit system and how does it work? Well, in order for us to go over the take profit system, we have to go over our inputs first. So for our take profits, you will see here in our file that we have a choice to choose between points, ATR Day percent, and stop loss ratio. So for this scenario, we're going to go over our ATR Day percent feature. What this feature is going to do is it's going to take the ATR, the 1 day, 20 period ATR into consideration when setting up the take profit levels. Now, normally people will just take either the 1 hour, the 1 day, the 15-minute ATR, and they'll just do a multiple of it. We take this a little bit further. We do have that option and feature in our EA, so we have the take profit by ATR, and we have a factor here we can multiply it by, but our ATR day percent works a little bit differently. This is our proprietary ATR feature that we use, and what it's going to do is it's going to take the 1 day 20 period ATR. This level is obviously interchangeable. We can change the period, we can change the time frame, and it will take this setting. So we'll take 75%. So here's a percentage of it. So 0.75. So 75% of the 1 day 20 period ATR is what it's going to take into consideration. Now, this is just not just a multiple. It goes further than this. So let's remember those features. 75% of the 1 day 20 period ATR. Okay. So if we look at the day, here we go. Let's do 4/18/24, for example. Let's just say we took our entry was triggered here on this candle right at this horizontal red line. So this horizontal red line, this candle, let's just say our entry was here. The way this is calculated is it's going to, first off, we need to get the values for the 1 day 20 period ATR. So this is 4/18. If we go over here and look at the days and the ATR, if we hover over this, we'll see that this is on 4/18. The ATR value is 0.6878. So if you multiply that by 1,000, because this is a USD yen pair, we're going to get 687.80 as our ATR in points. So let's go back over here. We have, okay, so 687.80 is our 20-day ATR. Now, if we got into a trade at this candle over here, the system is going to do is it's going to take from the entry point to the low of the day. Since this is a long position, we're going to look at the low of the day. If this was a short position, it would go high to entry. But instead, since we're trying to go long here, it will take the entry price and subtract it by the low of the day. So the exact calculation, if you look at our data window over here, if we got in here, which is the price in this candle, if you can see the horizontal line there, the figure is 154.452, and it's going to subtract it from the low of the day. So the low of the day is going to be here. Just get exact figures here. This is going to be minus 153.957 is going to be 0.495. That's in pips. Let's do it to points times 1,000. So we have 495 points. So low of the day to the entry, it has already moved 495 points. Okay, our ATR, remember, was 687.80. So what we're going to do is we're going to subtract the ATR 20, the 1 day ATR 20, from the low of the day to the entry point. And then we're going to multiply that by 0.75, which is our 75% of that period. So let's do the math here again. We're going to do 687.80. 687.80 minus what we've already moved, which is 495 points, equals 192.8. So 192.8 is going to be the ATR 20 1 day period minus the low to the entry point. So 192.8. Now we have to multiply that times 0.75 equals 144.6. So our take profit is going to be 144.6 points from the entry, which is pretty much, if we look at it, this is kind of an estimate here, right there. Yep, it's about 143. It's exactly like kind of where we would take our profit at. So we enter here, our take profit would be right here based off of our system. Now, why do we do this? Well, if we are looking at an accurate take profit, we don't want to just take a factor of the ATR like most people do, because if you get in late to a trade, let's just say we got in, let's just say we got in here, which is the market didn't move so much after, and we did a multiple of the, let's just do a multiple of the 1 hour. So if we got into here and we used this pretty much a standard system which people use, which is 3 times the ATR. Okay, so if we got into here, the ATR here is about 154 points, if you can see over here in the data window. So 154 points, 154 times 3 is going to be 462 points, which obviously does not happen a day like this. So if we calculate, we go here, 462 points would be way up here, would be most people's take profit if they were just going based off of the ATR. So we factor in how much we've moved for that day, which is really important, because if you're getting into a trade late, you don't want to take the full amount of the ATR points. Now we use a 20-day period on the daily to give us a better estimate of what the market is doing, how much it's moving on an average for the last 20 days, and then we will take a percent of that. So that's how our system works. It helps us on days like this where we've already moved X amount of points and we want to set that take profit dynamically. This will happen every time we do a trade. We will take the same kind of calculations from our entry point. So our entry point to where the take profit is very, very important. It's kind of key to our system, and you want to make sure that this is dynamic, and that's what we're doing. We have a dynamic, it's constantly changing, it's constantly moving. As the ATR is moving and as our trade entry price is moving, the number will be different. That's how our system works for our ATR Day Percent take profit system. Hope you guys liked it. Please smash the like button.